and welcome to yet another episode of Cash 22, where we continuously continue to track the cash crisis or the cash cleanup, depends on which side of the treasury or the opposition benches are, and you're looking at this debate. But thank you very much for tuning in this evening as well, because today we're going to discuss not the politics but the economics of demonetization. It has been a fortnight since the government implemented the demonetization drive. There have been accolades and brickbats. 86% of the money in circulation has been extinguished at a moment's notice. How is this really going to impact the Indian economy and more so the Indian financial markets? Let's take this across to three very special guests. Suyash, Senior Consultant NIPFP, Arvind Virmani, former CA and former IMF ED, and of course KC Chakrabarty, the former Deputy Governor at the RBI. Thanks each one of you for being with us. Mr. Rai, you've been rather critical of the government's demonetization drive. 2 weeks into this, are you still going to hold fort? Do you still believe this was perhaps ill-conceived and poorly implemented?
Yeah, so I started commenting and writing on this just a few days after this policy was announced, and the main basis for it was the knowledge that was with us on November 8th. My view has not changed in the last 2 weeks because things have not really gotten better. In fact, there are more problems that have been added to the policy that was announced on November 8th. Now, every policy has some expected benefits, some expected costs, and you have to look at the uncertainty that the policy creates that could lead to more costs than you had expected at the beginning. Now, when you look at the expected benefits, the key points that the government was making while the announcement was being made are that fake currency will be eliminated and black money hoarders will be hurt in some way. Now, if you look at the evidence on these, fake currency, we have a pretty good recent study done by a National Investigation Agency in collaboration with the Indian Statistics Institute, and it found that total fake currency in circulation is about 400 crore rupees in the entire economy. That is 400 crore rupees out of the 17.5 lakhs plus crore rupees of currency in circulation. So it was a significant amount, but not really that significant, given that only 1 out of the 4,000 notes in circulation is actually a fake currency. So there could be other ways to solve this problem, as we usually do. Periodically, the ministry eliminates old notes and replaces by new notes. You don't have to do a sudden ban for that. Second benefit was considered to be the loss that we inflicted on people with black money. Now, if you look at what evidence we have on that, the best evidence comes out of data from the raids conducted by tax authorities. So if you look at that data for the last 10 years, what you see is that cash that is seized in these raids is about 4 to 7% of the total undisclosed income or black money that is found after investigation. So that's the maximum amount of loss that you can inflict upon someone with black money, and even part of that might get laundered during this process. We'll see how that goes. And one more benefit that was talked about is the disruption of terror and criminal activities. But those are things that will happen for some time. Short term, there will be disruption in terror activities, as we are seeing. Some criminality, which is cash intensive, might also reduce for some time. But whether this will be a lasting impact, I seriously doubt. On the cost side, what we are seeing is, since 86%, as you said, of the value of currency in circulation is actually been discontinued, there is a huge disruption in the economy, both in consumption and production side. Many people use it not just for storing value, but also this 500 and 100,000 rupees notes are used for exchange, for transactions. So transactions are getting hit. Production in the informal sector is getting hit because many of these productions are based on cash transactions with daily wage laborers, weekly wage laborers. It's already getting hit, and the huge transaction cost that is incurring of crores of people standing in line, wasting their time, banks not doing anything other than this business. And finally, over the uncertainty. There are some things that are known, but the uncertainty that this decision has dragged has basically created a fertile ground for all kinds of rumors, all kinds of conspiracy theories and frauds and fake schemes happening in the economy. And it's very difficult at our level of development for government to actually enforce, to ensure that such uncertainty is not misused. And that's what we are seeing. Every day we hear a new rumor being spread, and government is going helter-skelter trying to control the consequences. And I don't think it's getting the upper hand of these rumor mongers and conspiracy theorists. So net-net, I think that this was too big a risk to take, and we are still seeing the consequences of it.
Just hang in there, because you raised an important point here about if black money is indeed unearthed, it could end up laundered. There will be a short-term impact on terror funding, but long-term, you know, the risk to reward ratio doesn't really fit your equation. But KC Chakrabarty, you've been a man on Mint Street. You were responsible for the currency. Do you not believe that demonetization will indeed curb black money?
No, I don't think demonetization is going to curb the black money. Short term, the existing stock of the black money may partly be, neutralized. But then, as we say, that it is the process of creation of black money, the people who create the black money, if they are not tackled, and that requires structural reform, that requires much easier steps to be done. Unless you tackle, people will create black money with the new system also. So black money cannot be tackled by demonetization without changing processes and the people bringing the structural reform in the economy.
Dr. Virmani, the essential argument that two of my previous guests, both Suyash and KC Chakrabarty, are making is that this is not a move that is going to come down heavily on black money, because this is really impacting the small petty cash that was lying with people. It does not really involve the black money in circulation. That's a larger point. My question to you is, A, do you hold that view? And B, as an economist on this panel, do you also believe this could have been perhaps a little better implemented, considering this was in the works for about 6-9 odd months now?
So, you just flashed some GDP numbers, etc. So let me start by kind of laying down two issues, the way I look at it. One, if you're talking just about black money, you have to see it as a series of steps. As I pointed out in my blog several weeks ago, that a number of steps have been taken before this event, like the black money bill, the real estate bill, GST, which is a reform which is supposed to reduce tax evasion, the announcements on the corporate income tax, etc. So if we are talking about black money as such, you have to see it in the context of what has been done before, what has happened now, and what are further steps may be needed or are in process. I can discuss that further if you want it, but let me make my second point. The second point is, well, there are 3 points. So the second point is that anybody who's dealt with cash and who understands transactions should have told the government that the key here is the withdrawal of the transactions part of the cash, the currency or cash, and how that will affect, and that depends critically on how quickly you can replace that. Now, it's very hard to say right now how much of that 14.4 lakh crores which has been talked about is the transaction parts for normal everyday transactions. Let's just, for the sake of assumption, assume that it's about 5 lakh crores. It could be less, it could be a bit more. Now, so most of the negative effects you're seeing and are being talked about are all due to the fact that this money, which was in 500 and 1000 rupee bills, has been withdrawn. As soon as you are able to get it back into the economy, all these negative effects will disappear. Now, there is a cumulative effect. If this can be done within 1 month, you will have certain effects on GDP, which I can discuss later. If it takes 2 months, it will have worse effect. If it takes 3 months, it will have even worse effects. That's my second point. Again, we can pursue any individual item. And finally, the third point, which many economists miss, is that it's not just the proportion which is saved in. The black money transactions are carried out all in cash. So if you are buying or selling, ratio used to be 60-40. Now people say 50-50. So let's, for the sake of the argument, assume 50-50. Those transactions cannot take place because this 14.4 out of this, most of that black part is gone. So I expect the big gain, which many people are missing, will be in the form of a decline in real estate prices and basically this black portion disappearing. But it doesn't happen by itself. The government has to take certain steps. For example, I just want to mention two. One is circle rates. Anybody who's talked to or bought or sold property in Delhi would know that there are circle rates. And in fact, investigating this issue, I found that in New Friends Colony, the market rate is already below the circle rate, so there are no transactions happening. So you will have to reduce circle rates if you want market prices to fall. And the second one, and I'll conclude with this, is the stamp duty. If you want that white, the real estate sector to become white, then you have to reduce stamp duties.
Hold on, just hold your thoughts there. Those are the obvious two benefits out of this, which is the clamp down on illegitimate wealth, on unaccounted wealth, and of course the correction in that real estate asset as a real estate bubble as an asset class. But Suyash Rai, my question to you is about the point that Dr. Virmani raised earlier, that the problem or the reason why this is being criticized is the fact that that currency has not been replenished. 86% of the currency is being withdrawn, but it has not been replenished. Now, if you go by conservative estimates, it's going to take the Reserve Bank of India at least 7 months to replenish that currency. And so we don't see hardship, or we don't see these wars ending anytime soon, do we?
I mean, we don't. So we have data from the first 10 days, and they were able to reintroduce about 1.36 lakh crore rupees worth of new notes into the economy. And cash really matters in India. Other monetary policy instruments are less effective because many people use only cash in the economy. More than 90% shops have no other way of accepting payment other than cash. It might change, but it will be slow. I mean, it will not be overnight becoming a digital economy, and all the payments are not going to go digital overnight. There will be a transition pain. And from what we are hearing is that even though the ATM constraint is getting relaxed, the printing of currency has become a bigger constraint, and that critical constraint might drag on this process beyond even December. And the current plan was to do everything as soon as possible, so the costs don't add up. And once the costs are building up, one of the biggest risks we face in the economy are that some firms who are on the verge of failure might not be able to take this shock, and then those firms might fail. And when a firm fails, it's a huge loss, not just in terms of GDP loss, but organizational capital is lost, years of organizational learning is lost. Those kind of things should not have happened, unless there is some kind of an external calamity, an external shock. But this is self-created. This is created by government, and it is dragging on. I mean, if this whole remonetization was a 7-day or 10-day or 15-day affair, the shock would have been much smaller. But look at what is going on. We have just done 9% in 10 days, which means even if we have to do 7.5 lakh crore rupees of remonetization in cash form, it might take beyond December. And that is going to make it very difficult for the economy.
Indeed, it will make it difficult for the economy, because 86% of the currency being extinguished is not an easy task to replicate. But Mr. Chakrabarty, the question really is coming your way. You've had experience on Mint Street, and we all actually witnessed a massive error in the printing of 500 rupee notes today. Can this be blamed on just the current rush, like the RBI's official statement is? Or is this perhaps yet another sign of a string of very ill-prepared events that have led to the whole demonetization drive? I mean, how can RBI get the printing of 500 rupee notes wrong?
No, I don't think the rush can be an excuse for doing the wrong thing. If you are saying that a fellow is running the train and because of rush he has done something wrong, you cannot justify that. This is not a thing. I don't think that you do anything with the speed, but the fundamental thing, you must do the thing accurately. Otherwise, speedily doing a job has no meaning if you are not able to do the job properly.
Dr. Virmani, this is really coming your way. You either do it well or you don't do it at all. If you have demonetization, today the RBI can't put up its hands in thin air and say that we got it wrong because of the rush that was there. I mean, how can you get the printing of a currency note wrong? Because you're actually risking counterfeit there. You're risking the credibility of the central bank. In any case, a lot of people, and including Manmohan Singh in Parliament yesterday, believe that this whole exercise is going to erode the confidence that people have had in the Indian banking system, or for that matter in RBI or the Indian currency system. Given that error that we did see today, which is a massive error according to all of us here, who's to be blamed for this?
Well, I think Mr. Chakrabarty is the best person to tell us about the speed of printing, etc. But I would just make another point. Again, a lot of economists have focused on the monetary aspects of total liquidity, change in cash deposit ratio, etc. I basically have two additional points on this. That one, this change in the cash deposit ratio is a forced change. It's not a voluntary change. So the effects are quite different, and they are actually mostly transitory. So as the cash goes back into the system, this liquidity picture will again tend to revert to what it was before. That's one point. Secondly, people may not realize that if you remove 5 and 1000 rupee notes and introduce even equivalent 2000, there's a fundamental change, because if you bought something for let's say 600 and gave 1000 rupee note, you would have to get 400 back. If you now give a 2000, you have to get 1400 rupees back. How do you get it? That means the demand for 100 rupee notes jumps up tremendously. There is something that doesn't seem to have been realized. So the key, the critical point which I think you have kind of noted, is that the replacement of 500 rupee notes is going to be very, very important for the point I was making earlier. That replacement now, because things which were used often in trade are no longer there, you just could not replace it by 2000. It has a completely different purpose. So there is this real uncertainty which is also feeding into estimates of GDP, etc., of how quickly they will generate more 100 rupee notes, and how much of the 500 and how quickly they can replace. I think that's really the critical issue to me. I mean, the operational issues, I'm sure the former DG is better placed to answer.
Indeed, but Suyash, I want to pick your brains on this. A lot of people have criticized the government for flip-flops on policy. There's a new norm every day. Exchange will be higher, then exchange will be lower. Exchange has now gone. 500 and 1000 will continue up until the, but there's now not going to be no over-the-counter exchange. My point to you really is, while it's easy to criticize the government on that aspect, the counter way of looking at the whole thing is that this is a war room-like situation. You are responding to a very dynamic, changing situation with as much agility as you possibly can. Would you not give the government its due on this?
See, the policy is inherently based on certain assumptions. A key assumption here is that everybody is guilty unless proven innocent. So because you have cast this wide net to catch a few big fish who might be getting away with very bad behavior in the past, everybody is now suspect. So you look at the example of a ban on exchange of notes in bank branches. Now you can only exchange them in RBI offices. There are only 31 of those offices in the entire country. So they allowed exchange of of notes for up to 4,000 rupees and 4,500. They introduced the ink, and then it went down to 2,000 rupees, and now it's zero at bank branches and banking establishments. So what that does is that there is a certain suspicion within which this policy is framed and is being implemented, which inherently makes it difficult to do flexibility well. So there is good flexibility and there is bad flexibility. The biggest relaxation they have given is for weddings, which is 2,50,000 rupees. But if you look at the KYC requirements for that, they are enormous, and it's almost insulting. If somebody is actually using their own white money to do this, they will feel very insulted, and the transaction cost of KYC itself is so high there. So the policy itself is basically based on a certain degree of suspicion about everybody out there and the amount of collusion that can happen in laundering of the money, which makes it very difficult to do actually good flexibility. So you're running helter-skelter, responding to one interest group but not able to respond to 99 other interest groups. Inherent assumption is such that you cannot do really much good flexibility. So yes, I agree with you that to some extent this flexibility, these day-to-day responses may have helped some stakeholders. But all of them, if you look below the surface, you will see that not much is happening. For example, 5% of seeds are bought, 5 to 10% seeds are bought from government shops, and you have relaxed there. So farmers can use the old notes to buy those seeds there. The weddings usually, at least in the middle class, cost much more than 250,000 rupees. You're allowed there, but the KYC requirements are extremely high, which makes it very difficult to use that window. So we have to think about the nature of the policy itself, which makes it all of this day-to-day tinkering and iteration actually not very, very helpful. The cost will still add up for most people who are paying this cost without being in the wrong.
Indeed, but Dr. Virmani, I want to now turn focus to the other aspect of this discussion, which is the obvious impact on consumption, on growth, on the rural economy. Absolutely. I mean, you know, the point that Suyash was making there. How do you see this impact GDP growth? Dr. Singh, and I think in Parliament, he quoted a figure of up to 2 percentage point cut in India's GDP. That's almost 3 lakh crores gone from an economy that's 150 lakh crore economy. But my larger question to you is, how do you see this really impact GDP in the short term? Do you believe the pain is worth it? Considering consumption will be hit, we will perhaps see pain in this and the next quarter?
Before I come to that, you'll allow me, I just saw Larry Summers' comment on corruption, and that's one of the things which we haven't discussed at all. So my second reaction, the first was the point I've already made. My second reaction was that the politician, Babu, police, mafia nexus as I call it, will be hurt the most. And whatever the screams which I have heard from different politicians, some of them surprised me actually. The ones who came on first, I was surprised that they have obviously a lot of money in cash, and they are hurting. So I'm very happy at that. But of course, as we all know, I mean, anybody who's worked on economic reforms knows that just hurting them once is not good enough. You also have to follow that up with campaign reforms. And I would say, you know, reforms work in odd ways, and one kind of indirect effect of this would be to put pressure on the central and other governments perhaps to do the kind of reforms, campaign reforms, the police legal justice reform that I wrote about in 15 years ago. There's a 2002 paper in EPW. So that's the part I would say I was the most happy about. Now coming to the GDP, it depends, as I said, critically. That's why I gave you that thing about replacement of cash. I was very clear that in the first couple of weeks there would be, in fact I called it a collapse, that retail activity, retail trade in goods, services, and in services as an economist I include wage labor, daily wage labor is a labor service, would collapse. That's the word I used in my first tweet on the 9th of the month. So that kind of has happened. All the information one has got says that happened, but also one is beginning to hear reports that some of it is reviving. I mean, just to give an example to make it more concrete, one particular doctor who I know said that business went down to virtually zero for about 10 days or so, and on the 11th day it was almost normal. But that doesn't mean it's going to be normal right for the week, right? But that's the kind of thing I'm talking about. So what I say is that based on the information up till now, the first 15 days, I expect an overall decline in the annual GDP growth of about 0.2%. Now, if this continues, as I said, beyond 1 month, my estimate would then go up to 0.5. But I really am not, you know, as people have pointed out, this is unprecedented. So all these estimates are arbitrary. We need a little more information. And if you ask me by the end of the month, I'll give you a more accurate estimate.
So we're all groping in the dark as far as the impact on the GDP growth is concerned. But Suyash, I want you to wear your economist hat right now and answer that question for me. There are obvious concerns on growth. We've got brokerages, and can I just put out those graphics for our viewers? Brokerage houses from Ambit to Nomura to MS, everybody's put out estimates of how badly the GDP could be hurt. What's your own estimate? Are they overreacting? Are we underestimating? Where does the truth really lie?
So I'm not in the prediction business, I'm in the analysis business, and as an analyst I'm right now focused mainly on what are the factors that might lead to a GDP impact. So I'm not going to comment on whether Ambit forecast is wrong or somebody else's forecast is too optimistic. So I'll just say that it will depend primarily on a few things that we know. What we know is that, as Dr. Virmani said, how quickly can you send back the cash that was being used as a medium of exchange back on this economy. Now we don't know what was that portion. I'm going with the assumption of about 7.5 lakh crore rupees needs to be sent back in the new notes form, and if we are able to do that quickly, then the impact will be less. If they are able to take, if that takes 3 months or 2.5 months, the impact is going to be much more than we had initially imagined, and Ambit might be right. Now, the other things that we don't know are what are the extent to which credit relationships are going to last. For example, there are about 14 crore wage laborers in this country, casual workers who work mostly on cash wages, daily, weekly, fortnightly paid. Now, those relationships are not really credit relationships, because beyond a point, a laborer is not able to supply his work on credit. So those relationships are breaking down already. So some production is already getting hit. Now, if that continues for the next few months, then again, Ambit forecast will be true. But if all of this takes less time, and suppose in 10 days and 15 days, which is nearly impossible given the data we have, and all the remonetization happens quickly, then the impact will be less, and maybe Dr. Virmani will be right, and some other people who have taken a more optimistic view will be right. But the key right now is to remonetize quickly and and get the money back in people's hand, get the cash back in people's hand, most importantly.
I have a very quick answer. That's the question that I want KCC to answer here. And Mr. Chakrabarty, does this entire move create the elbow room for what people in New Delhi are calling a radical rate cut?
You see, look, you are taking advantage of the situation. People are not able to withdraw the money. They are not able to get the money for cash. So you are reducing the rate. I think there is a issue of consumer protection. We must look into that. Then you must allow freedom. If my deposit has matured, I should be allowed to withdraw the money. Why that I have to keep the money in the bank? Now you say you transfer the money to some other bank. I may not have another account in other bank. Nowadays, to open an account is a problem because banks are more busy. So first thing is that depositor is cutting, you are exploiting the depositor. You are not cutting the advances rate. But for the last 1 year, I am listening. It is both finance minister and governor of Reserve Bank is saying that there is no transmission effect. Banks are not reducing their lending rate. And even with this also, they are not reducing the lending rate. So I don't know, it is ultimately, people are going to suffer, depositor will get lower rate of interest, and borrowers will continue to pay higher rate of interest.
It's good to see the former man of money talk about consumer protection. But on that note, KC Chakrabarty, Arvind Virmani and Suyash, it's a fascinating discussion we've had on the economics of demonetization. We hope to reconnect very soon when the situation does improve. For viewers there, thanks very much for tuning in this evening.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.